Well, hey everyone, welcome to this podcast, Strategic Performance with the Balanced Scorecard. Today we're unpacking how strategy gets executed inside a business and not just dreamt up in a conference room with free bagels. And to make it all real, well, we're going to use Delta Airlines, headquartered right here in the old ATL. I'm Professor Jeff Byrne, and I'm excited to be with you. In this podcast, we'll first explain what is strategy and the three ways companies differentiate themselves with things called value propositions. Next, we'll explain what the Balanced Scorecard is and how it uniquely flows from the company's strategy and their value proposition. Next, we'll go through the four perspectives of the Balanced Scorecard. For each one, I'll break down the concepts, then show how Delta Airlines might use them in real life. After that, we'll introduce the strategy map. It's the wiring diagram behind the scorecard. We'll walk through what Delta's strategy map might look like and wrap up with common pitfalls of the Balanced Scorecard. So grab your carry-on. This flight's ready to depart with all of this and more right here in this podcast. Okay, so let's start at 30,000 feet. That's code for airline talk. What is strategy? Well, at its core, it's a game plan. It's how a company sets out to win its market, how it's attracting customers, beating competition, and delivers value in a sustainable way. Strategy isn't just a slogan on the wall or something reserved for the C-suite. It's the blueprint that guides every part of the organization. A good strategy answers three essential questions. Are you ready? Who is our target customer? What value are we delivering to them? How will we deliver that value better than anyone else? And here's the kicker. A strategy is really just a theory. It's an educated hypothesis about how the company will succeed. It's not a guarantee. That's why execution matters so much, and why tools like the Balanced Scorecard were invented in the first place. Your strategy determines what you emphasize. It differentiates the company from its competitors in ways that attract and retain customers. These sources of differentiation are formally called value propositions, and these are the essence of strategy. The three broad categories of differentiation are customer intimacy, operational excellence, and product leadership. The first value proposition, customer intimacy. Companies that pursue this are saying to their customers, you should choose us because we customize our products and services to meet your individual needs better than our competitors do. This isn't about being the cheapest or the fastest. It's about knowing your customers so well that they feel seen and understood. These companies often build long-term relationships and loyalty by delivering personalized experiences. Some popular examples: Ritz-Carlton, they empower every employee to spend up to $2,000 to resolve guest issues without asking a manager. Now that's intimacy. Zappos became famous for their 8-hour-long customer service calls and handwritten thank you notes afterwards. That's customer intimacy. In B2B, business to business, think of customer software company that tailors every bill to fit the client's internal systems. Companies that focus on customer intimacy, they tend to track things like customer satisfaction scores, repeat business retention rates, net promoter scores, NPS. That's how likely they are to how likely the customers are to recommend that company to others. Response time for resolving issues. The Balanced Scorecard that we'll look at in a few minutes for a company that follows the customer intimacy approach might spotlight metrics that reinforce relationship building, responsiveness, personalization, because that's what customers are paying for under this value proposition. Next is operational excellence. These companies are saying, you should choose us because we deliver products and services that are faster, more convenient, and at lower prices than our competitors. This is all about efficiency, reliability, and scale. It's not glamorous, it's disciplined. Great examples: Walmart, massive supply chain infrastructure, always low prices. McDonald's, consistent food, quick service, tight processes. Amazon Prime, fast, frictionless shopping at low cost. The focus here is not on customization, it's on consistency and speed. These companies will pay keen interest in metrics like order fulfillment time, unit cost, inventory turnover rates, on-time delivery rates, percentage of defects or returns. For an operational excellence strategy, the balanced scorecard needs to emphasize internal efficiency and process quality, not just outcomes, because in this model, low cost is typically the value. Last but not least, product leadership. Here companies are saying, you should choose us because we offer more innovative, cutting edge, and higher quality products than anyone else. Think of companies that are always on the frontier. They're thriving on creating the biggest and best next thing, often setting trends before customers even know what they want. Apple with the iPhone, iPad, now Vision Pro. Tesla with electric cars and self-driving technology. Dyson and vacuum with air purifying engineering breakthroughs. But this strategy comes with pressure. It requires high investment in research and development, rapid product development cycles, a culture that really embraces risk and creativity. Product leadership companies often track things like percent of revenue that they generate from the new products, research and development spending as a percent of total sales, product defect rates, customer ratings on innovation. The balanced scorecard for companies that follow this value proposition has to highlight metrics on innovation because the goal isn't to be the cheapest or most personalized, but to be the best. Okay, now that we've covered the three generic value propositions, let's bring it home with an example. Delta Airlines. Here is Liz Stanton, one of our proud Goizueta MBA grads from the class of 2010. So proud to have Liz as a regular guest in my MBA managerial accounting classes. Liz will say that Delta's value proposition is a hybrid one. They don't fit neatly just into one category. Well, that's kind of interesting. First and foremost, they're always about operational excellence. Liz will say it's the foundation. If we don't get customers where they need to be when they expect to be, then nothing else matters. But what really distinguishes them is they try to enhance that customer experience. They spent 15 plus years building out things like redesigned terminals, upgraded airline lounges, premium cabins, personalized technology, and much more. These investments reflect a clear commitment to customer intimacy. Delta isn't trying to undercut Spirit and Frontier on price. No, they lose money on the main cabin. It's not just trying to also outlux Emeritus. Instead, Delta's value proposition says, choose us because we're reliable, we're comfortable, and we take care of you across every part of your journey. Okay, so now that we've nailed down strategy and value proposition, the next logical question is, well, how do you make sure it gets executed? That's where the balanced scorecard of the BSC comes in. It helps answer questions like, what are our financial goals? What customers do we want, and how are we going to win and retain them? What internal business processes are critical in providing value to our customers? How do we maintain our ability to carry out these critical business processes? Voila, that leads to the balanced scorecard. It's a strategic performance system that helps companies translate their big picture strategy into day-to-day operational goals and metrics. The balanced scorecard says, hey, if you want to improve financials, let's also track what drives financials. Because if we just sit around and wait until our financial metrics results are in at the end of the quarter or at the end of the year, well, that's likely too late to make any real effective change or improvement. Instead, let's look at the leading indicators, not the lagging indicators like financial success. Look at the leading indicators, like our customers. We can't have financial success unless customers realize we're delivering more value than everyone else. Internal business processes. We can't have happy customers unless we have improved business processes that deliver more value to these customers. Learning and growth. We can't have successful internal business processes unless we have high quality people grounded in what we do and working to maintain our ability to change and improve. Let's zoom in on the four perspectives. These aren't random. They reflect how strategy gets executed. Let's start at the bottom and work our way up. First, that learning and growth at the bottom. This is the foundation. These metrics answer, how are we building capacity to innovate, improve, and adapt over time? Think of it as the soil that supports the rest of the tree. The learning and growth perspective focuses on what your employees need in order to drive strong internal processes, which then leads to greater customer experiences and ultimately financial performance. The 6 categories of metrics typically fall in these areas. Recruiting, metrics that look at, are we attracting the talent we want? Skill development, how well are we equipping employees to succeed? Metrics that look at compensation and advancement, are we helping employees grow and to stay? Wellness and safety, what metrics do we have that show that we're providing a health and safety workplace? Job satisfaction, metrics that look at how well employees are engaged and proud to be here. Retention, metrics that look at how well we're keeping our top talent. These metrics aren't just HR fluff. They're leading indicators. If these numbers start to slip, well, your entire business can feel it later on. Without learning and growth, the other metrics may improve temporarily, but they won't last. At Delta, these might include things like their training programs, how many hours employees get each year, digital adoption. All the employees carry these little portable iPads around. They'll look at data metrics that show how widely these digital applications are being used. They'll take regular employee surveys and look at the percent of employees that feel like they're engaged and satisfied with their role and their location. Leadership development, what percentage of positions are being filled from within. Delta knows a disengaged employee today, that's a customer complaint tomorrow, and a financial hit next quarter. As Liz will say, when our people feel supported, they show up with pride, and that shows up in every customer touch point. Now for the engine room, internal business processes, okay? This asks, what must we do exceptionally well to meet customer expectations and to hit ultimately our financial goals? The objective of this perspective is to identify and optimize internal processes that most directly support customer value and ultimately the financial performance. Metrics from this perspective cover things like innovation, metrics that show the level of new solution development and new ideas, innovation growth, how we're staying ahead of the curve. Metrics on product and service quality. This focuses on whether our core offerings meet standards, monitoring level of defect rates, warranty claims, metrics that look at agility, metrics that look at cost, metrics that look at time. Time-based metrics reflect speed and responsiveness. Lean resource management metrics. Here they're looking at optimization and elimination of waste. These are things that customers don't necessarily see, but you can bet your bottom dollar they feel. Long wait times, lost bags, bad onboarding, that's an internal business problem. At Delta, things that they'll monitor will be their flight completion factor, percent of flights completed versus the scheduled. Weather aside, a high number means a strong planning and execution. Bag mishandling rates, turnaround time, how fast ground crews can clean and fuel and prep the planes. Maintenance reliability, incidents per flight. So, fun fact, Delta has the lowest cancellation rates in the U.S., and it's not luck, it's disciplined, metric-driven process control. Next up, customer perspective. This one asks, how do customers see us? Are we meeting or exceeding their expectations? If we have good learning and growth systems, this will support good internal business processes. And if we have good internal business processes, this should support happy customers. And happy customers are leading indicators of what? You got it. Financial success. Customer measures are often answering the question, how do customers see us? And are we creating value for them? Metrics might include those that measure customer satisfaction. Like, would you recommend us? Customer acquisition rates and retention rates. Customers, are they sticking around? The level of customer loyalty. Response levels of customer satisfaction surveys. Customer lifetime values, looking at the revenue growth from a single group of customers or a certain customer type. In short, you can't grow your financials if your customers are walking away. Let's take a look at what Delta does, or what they might do. This isn't published. This is just kind of what we're supposing. Delta isn't trying to be Spirit Airlines. Their strategy is premium reliability, and they measure the heck out of it. Customer metrics include that Net Promoter Score. They track this by route, cabin class, loyalty status. How likely are folks going to recommend us? satisfaction by cabin class, on-time arrival, SkyMiles program engagement. This adds about 20% of revenue to Delta, their SkyMiles program. Delta's insight, a 5-minute delay today could cost you a loyal customer tomorrow. They've built a customer strategy that feeds back into brand strength and into revenue. Okay, the financial perspective is the classic starting point, but it's a lagging indicator. Metrics here from the other three areas, they flow into this, and so the other metrics are leading indicators. The financial perspective tells us whether the company's strategy is delivering bottom line results. The objective here is to improve profitability, growth, value, and to use capital efficiency, capital effectively. So the perspective answers the question, how has our financial performance improved? These are the outcome metrics the scoreboard could end up with. Things like sales, not just about total revenue, but where the sales are coming from. Profitability ratios, cash flow metrics. Even profitable companies can run into trouble. You've heard cash is king? That's wrong. It's king, queen, jester, and the whole royal court. Profits, that's that bottom traditional number. Trend performance, these are metrics that track whether performance is improving over time. Market performance, how are we doing in relation to everybody else? But again, financial metrics are lagging indicators. They tell us how you did, not how you're doing. That's why companies shouldn't just rely on these. They should make sure all indicators that eventually impact the financials are working. Any knowledge well ahead of the quarter, ahead of the end of the year, well, those things can be fixed before the end of the quarter and the end of the year financials are turned out. So this is a slide from Delta's investor meeting that gives us an idea of what their financial metrics are. They will build into their balance scorecard. Notice that sales are missing. Delta doesn't set public revenue targets, but instead they back into sales needed by starting with bottom line financial goals and working backwards. They've got profitability ratios. Here it's the mid-teen operating margin. They also aim for a 15% return on invested capital. Cash flows, they want to have between 3 to 5 billion in annual free cash flow, even after accounting for major reinvestments in things like fleet, airport upgrades, digital tools. Profit, Delta's goal is 10% annual in EPS. That's relatively low in relationship to Fortune 500 companies. Market performance, they have a one-time gross leverage target. So their goal is to keep debt in check and to support a strong credit rating. Their goal of 40 billion in unencumbered assets is a measure of financial flexibility and resilience. Instead of listing 30 different financial metrics, Delta builds its financial perspectives around this tight set of 5 interconnected targets. This is a balanced scorecard in action, translated into language investors and employees can rally behind. So how do we tie all this together? Well, enter the strategy map. A strategy map is shown here. It's a visual diagram that shows the cause and effect relationship between the 4 layers of the scorecards and the next layer up. It starts with learning and growth of base. These measures drive internal business processes, which shape the customer experience, which drives the financial outcomes. And notice that one particular metric might impact several metrics above it. So let's do a quick example of how this might flow in an airline setting. And let's state it in what's called an if-then statement. And so let's look at one here. If we invest heavily in frontline training, a learning and growth metric, how will that impact things? Well, if we invest heavily in frontline training, this will reduce bag mishandling. Oh, that's part of the internal business process. And if we reduce bag mishandling, well, that will do what? Increase customer satisfaction. And if we increase customer satisfaction, what's that's going to do in the airline industry? That's going to boost revenue per passenger. So see how these if-then statements take one particular metric and show the relationship between that metric and the subsequent metrics, or the subsequent layers of metrics in the balanced scorecard, I should say. One metric can lead to improved results in one or more future metrics, all the way up the food chain and eventually to financial success. Each layer feeds the one above it. It's like plumbing for your strategy. If the pipes are broken at the bottom, you won't get water at the top. Here's what Delta's strategy could look like. Delta doesn't publish their balanced scorecard, so we've kind of reconstructed it with data available. It takes the key metrics from the 4 areas, shows how each one builds into the next, and eventually to financial success. If all cylinders are flying, no pun intended, then things will work. I've made these linear for easier visualization, but note the same thing from the previous slide, that several learning and growth measures could impact several internal business process measures, and so on and so forth. Together, this strategy map shows how Delta invests in people and technology, learning and growth, enables better operations, which improves customer satisfaction, which ultimately drives profitability. In other words, great strategy execution is like flying a complex route. It only works if every system is coordinated and aligned. Okay, before we wrap up, here are the 4 classic blunders with the balanced scorecard. First, too many metrics. Don't turn this into a data swamp. Focus on about 3 key performance index metrics from each of the different layers. No alignment. If teams are measuring different things that don't link back to strategy, you're building a tower with really no foundation. No ownership. Someone has to champion the scorecard. Not just fill it out once a quarter, but really champion it and talk about how it's working. Treating it like a report card. This isn't just about looking backward, it's a tool for decision making and forward momentum. Don't let it become just another dashboard. All right, well, it's that time to return your tray tables and seat backs to their upright positions because we've reached the end of our journey. In this vodcast, we've covered what a strategy really is and how value propositions help companies stand out from the crowd, the structure and purpose of the balanced scorecard, the 4 perspectives of the balanced scorecard, and how they align. A detailed example with Delta and their strategy map. So now you've got the tools to go beyond just what happened and start answering why it happened and what should happen next. So get ready. You'll be using these tools in class, in case discussions, and maybe even in your job sometime in the near future. Let's go.